Hey everyone, welcome back to the Mark Loeffler Experience. We have our monthly market update, what's going on with the real estate market in Canada, and a bit of my outlook and what I'm expecting to see in this market. So everyone who's now subscribed, or everybody who's watching this who hasn't subscribed, just a bit about myself. I realize there's probably a lot of people who don't know a lot about me. My name is Mark Loeffler. I'm a real estate agent and investor, and I primarily focus in the Hamilton and Southwestern Ontario region in Ontario. I am looking in other areas in out east, out west, in the States for different properties as well. I have about 200 residential units and a couple commercial units. I own a couple small businesses where I'm the silent partner, 3 restaurants, one we just opened in the pandemic. Don't close us down, Doug. And yeah, I trade stocks. I invest in stocks, I should say. I don't trade them. So that's a bit about me. If you like this video, please subscribe. And a lot of work goes into making this type of video in particular. I've probably spent about 5 to 6 hours researching, digging up websites, doing different things. So if you could smash the like button for the YouTube algorithm, it really does help out the channel a lot. And yeah, comment down below. Let me know, hey, if you think I'm an idiot, tell me I'm an idiot. If you think I'm brilliant, tell me I'm brilliant. I'm okay with either. Comment down below, let me know what you think, what you're doing in the Canadian market right now. Let's talk. So in the process of this, one of my favorite people to listen to is Benjamin Tall. He is the head economist for CIBC, and he's a super smart dude. And to be honest with you, he's really level-headed. He's not prone to woe is me or the world is crashing. He just tells it like it is. So in the process of doing this, some of the highlights are, let's talk about the economy in general. Obviously, we know COVID is going on. There's been some shutdowns in Ontario. Other places are open, other places are shutting down. And what does that mean to us in real estate and what that looks like? So Benjamin Tall actually said that the Canadian housing, or the jobs market, the people who have lost their jobs, again, I've said this before, the fact that it's 80% of them are low income earners or renters. They're not homeowners. And the fact that we're seeing this massive increase in property demand right now, obviously it's a bit pent up from the spring. Also, we have record low interest rates. I mean, I'm hearing people, comment down below if you got lower than this, but like 1.7, 1.65 on a 5-year fixed mortgage, like that's insane. I haven't been investing that long. It's been 17 years, but my first mortgage was over 7%. And, we had Josh on the show the other day, and I think he got 2.2 on a 30-year on a triplex. That's just, honestly, it's free money. So, obviously that's driving it. Other than that, real wages are going up. People who are working are making more money than before. And this is, obviously we're seeing like unemployment rate is falling as we open up more and more. The stats came out from StatsCan, what was it, last Friday. So 1.8 million unemployed Canadians in September, down to 214,000 from August, so 10%. Obviously, we're continuing that trend from the record high of 2.6 million unemployed in May. Majority of unemployed people, 1.5, are looking for work. The number of people who want to work but are not looking has come down considerably as well. Let's see, just some stats here for you because I know you all love stats. Most of the employment increase in September was full-time, so people are going back to work. I think a lot of that had to do with school reopening. A lot of people who were staying at home are now obviously sending their kids to school because the majority of the increase, every province saw an increase except for New Brunswick and Prince Edward Island, and the largest gains came in Ontario and Quebec. And again, the employment among core-aged women 25 to 54 increased for the 5th consecutive month, but it was massive. So 134,000 out of the gains, right? So, sorry, and the employment increase was 334,000 for September. I'm remiss if I don't get the correct information. So, I mean, what does that mean? So wages are going up, people are going back to work, and you know, people aren't spending, like, other than, like, people are buying cars, people are buying homes. We're not spending money on trips right now. I mean, they are spending money on cottages. You could have been my neighbor at my cottage. One just went down the road for $1.4 million, which I think is insane. I've been there a little bit, not that long. Obviously, mine's not as nice as that. I got a nice shack. Anyways, we digress. Let's get back into the market update. All right, so this nice CBC article, which you see on the screen. So average house prices change in every province since September 2019. So year over year. New Brunswick was up 31%. Nova Scotia, 21%. Ontario, 19.67%. Prince Edward Island, 18%. Quebec, 18%. British Columbia, 13.5%. Manitoba, 8%. Alberta, 6.8%. And I know we've talked a lot about this with Alberta on this channel, was that, you know, they got hit harder because obviously oil prices go down, they lose a lot of employment and good paying employment because of that. Same with Newfoundland and Saskatchewan, they were up 5.89% and Saskatchewan up 2.86%. And just talking about that in this article, and we'll go into that and a little bit more stats and that type of thing right now. So monthly activity, obviously July, as we came out of the pandemic, was 60, this is all obviously in billions of dollars. So 63 billion, and in September was 61 billion, and a 45% increase year over year from last September. So the number of newly listed homes fell back 10%. So we're starting to see the market kind of level off. I mean, you know, last September was 68, and this September is 73. And obviously in August, we saw a lot of people list, you know, and they're talking about obviously declines around Vancouver and GTA. And we're going to talk a little bit about why that might be right now. We've set a record for the national home price of $600,000. It's up 17.5% from the same month last year. Like, this is big stuff. This is House Sigma. And this is for Ontario, Toronto. So as you can see, what I like to come look at is where we are. Are we in a balanced market? Are we in a buyer's market? Are we in a seller's market? And basically the absorption rate, how fast things are selling. So anywhere from 3 to 6 months is considered a balanced market. Anything 6 months and above is considered a buyer's market. Anything 3 months and below is considered a seller's market. Now, obviously, it's possible to have a buyer's and seller's market in the same market. So like downtown condos, for instance, I would say we're in a buyer's market. You know, some of the, like, obviously outlying areas, we're definitely in a seller's market. We're seeing average days on market go down month over month. All right. So Toronto housing inventory, new listings in the last 28 days was 3,156. Average days on market is 15 days with a selling price of 102%. So obviously Toronto, you're seeing a tale of two cities. The Toronto condo market is definitely experiencing a buyer's market. You have more listings than you have people buying, and that's still not really affecting the, I mean, it is affecting the price. It's not affecting it a whole awful lot, yet you still see very strong demand in the detached home market in Toronto, in these outlying areas, you know, even like High Park and things like that. And now, I guess you can ask, is this a buying opportunity? If you want to own something downtown, I don't think this is going to hollow out the core like some people think. Young people in a year or two, whenever we get the vaccine and whenever this is all done and everything's back open, like phase 6 or whatever that everybody calls it, people are going to want to live downtown. Young people are going to want to live downtown. That's going to bring back the renters. It's going to bring back people who want to buy their first condo. And, you know, talking to a big condo developer down there, the price that they have to pay for land right now is, I mean, they're setting record highs for the price of the land they have to pay to build the condos. So at the end of the day, the cost of the land is going up, the cost to build the condo is going up, and you know, the price of money is coming down. Like the price that they have to pay to finance these is so cheap right now, it's unbelievable. So again, people are getting mortgages at 1 point whatever percent on these properties. So is now a good time to buy a Toronto condo? I mean, it could be if that's your strategy and if that's what you're looking for. I mean, personally, I don't like to invest in condos because I like the control. Anyways, this is a market update. We'll do a condo one later on. So let's do Hamilton, for instance. Obviously, a lot more detached and type of properties. And so new listings coming on, 974. Homes sold, 537. Average days on market is 16. You know, September 2019, I don't know if that's actually correct. Oh, this is in the 1.2. So it's coming down on all levels. So under 250,000, which is typically a condo in Hamilton, but there's less of those coming up. You know, you got about 35 days, 36 days. The first time home buyer market, 250, you know, you're seeing 18 days, you know, 500 to a million. You're basically seeing what, 11, 12 days on market. Like that's super hot right now. If you're in that market to buy at that price point, yeah, I mean, you're going in, there's 10, 15 offers. And, you know, in the 1.1 million to 2.5, obviously, you know, people are moving out to these areas. And then we're seeing this across, this isn't just Hamilton, this is across the GTA. You're seeing that in Newmarket, you're seeing that in Durham. You're seeing a lot more of that right now. And this is just an example. Obviously, I know the Hamilton market pretty well, so I just wanted to put that up there. So Saskatchewan, you know, it's outperforming the market last year. Obviously, we can see it on the screen. You know, it's a lot of pent-up demand from the spring. Again, low interest rates, people who have jobs are seeing real wages go up. So at the end of the day, you're making more money, it costs you less to buy. People are buying bigger houses. And obviously there's still demand on the lower end, so they're able to sell that quickly. I mean, you saw it in the Hamilton market, that 250 to 500, you know, it takes a little longer to sell, but 500 to a million, it's like that. So there's a lot of move up buyers going on right now. You're seeing in Saskatchewan, Vancouver, obviously average sale price 1.3. So that's the thing. So in Vancouver, you see actually a little bit of a price decline, 1.4% month over month. Yearly change is still up 8%. New listings are 1,740. Homes sold 748. Average days on market is 18. So year over year, you're still seeing a big decline in average days on market, yet you're starting to see obviously inventory spike and the sales level off. So when you see that, you expect average days on markets go up and obviously price to decline. And this is what I look for when I'm looking at different areas and when I'm looking and I'm doing my analysis. All right, let's do Edmonton. Obviously, a blue collar town, and sales are up 35.5% compared to September. Now that we're seeing this across the board, obviously. So I'm not so surprised by that. And you know, single family homes are up more than obviously condo units. So single family home sales are up 43% and condo unit sales are only up 7% year over year. New listings were 2981, sales were 1872. So you see listings up 5.9% and sales down just a tip. It's basically flattening. So again, people are taking advantage of this hot market, listing their home, and yet you're starting to see where listings are ticking up and sales are flat here as well. You might be going from the the seller's market into more of a balanced market. I would probably argue that you're there anyways, because average days on market are 47, 65, 52, 53 for all residential. I'm going to tell you, you're probably already in a balanced market out there. You might be going to a buyer's market again, yet, you know, 1 month does not tell the whole tale. It just gives us a little bit of a trend that what we can see. So we have Calgary, and total sales were 1,700, new listings 2,700. So average days on market is 54. We're down a bit, and you know, we're seeing the same trend. So you know, new listings are pretty level, but sales are up. It's continuing on for October. You know, we're seeing that again, and days on market is actually coming down in Calgary, which I mean, I like to see. Calgary and Edmonton are very interesting to me because I think they represent a bit of an opportunity with low oil prices. I think it's probably going to stay low for a bit. Yet, you know, I think if I'm going bargain hunting, I might go out there and look at some apartment buildings. I've been looking at them, been running the numbers, haven't bought anything yet. Yet I have been looking out there and out east and along different areas in Ontario. So rentals, obviously, so the Toronto condo rental market right now has 23,000 active listings. Typically around this time, there's around 6,500 to 7,000. So that's up, well, that's 300%-ish, 350. That's a big number. So obviously we've seen rents come down for one bedrooms year over year, 15% and 12% year over year. Vancouver's basically flat. And we're seeing that happen out in Mississauga and outlying areas of Toronto where we're seeing flat numbers. And we're starting to see kind of a little bit of a downward trend month over month in these markets, in the Ontario markets, or they're just basically flat. Same with Hamilton, down 1.4, up 1.1 over a year. Yet I got to be honest that, you know, when these numbers get taken into effect, they represent I mean, you know, in Ontario we have landlord-tenant, we have zero rent increase this year. So we have all these older units that, you know, like bring us down, and I think less people are moving during COVID. So, you know, the new rental amounts aren't going up as much. Yet, you know, that's just anecdotal. And again, you're just looking at this, but like some of the big increases were obviously in Montreal for price increases. And this is just a national overview. You're starting to see, obviously 2020 rents are down. Oh, here's the thing. So a lot of what happened was, you know, millennials who lost their job moved back in with mom and dad, and you know, that lowered demand. You know, people just didn't come. A lot of foreign students didn't come for school this year. This is all coming back. I'm really not all that worried. I'm actively looking for more properties right now. I hope they scare some of you so that I have less competition on my next building. Yet at the end of the day, if you're watching this, I'm not all that worried. Yet again, as we open up more, a lot of these jobs come back, and people, no offense, I don't care how good mom's cooking is. You know, typically a lot of people want to move out and live their own life. Some people don't. I get it. Yet they do. What are 3 factors that could basically waylay us into the future? So, I mean, if we shut down again, then obviously that's going to affect us. But as we've seen, it affects the low-income earners, the renters, students, and with that, I honestly think we're gonna be fine. Yet at the end of the day, I mean, I hope they don't shut us down again. Please don't, Doug, if you're watching this, because I got 3 restaurants in Hamilton that I don't want to see shut down, and I enjoy going there. And I think if we're all smart about this, we don't need to do that. Number 2 is the mortgage deferral. Obviously, you know, that's going to start happening. People are going to readjust payments. People are going to now have to pay. And if they were, you know, not just taking advantage to save some money or do different things, then, you know, this could hurt, and we could see a spike in listings. And we've seen in some markets already that we're starting to see a spike in listings and sales level off. So this is going to decrease the prices. Obviously, we have some really, really hot markets here in Ontario. And if it's in that price range, I mean, 10, 11 days, average days on market, like that's ridiculously low. So it's going to be able to pretty much absorb that inventory pretty quickly. And number 3 is if we get the vaccine. Obviously, a vaccine is going to be able to let us open up the economy more, and that's going to bring back full employment. And I mean, people aren't just going to change what they do overnight. They're not going to go back on cruises. Some people will right away, not everybody. So people are going to save more money and spend more money locally, which is going to help the economy out with the vaccine. So when the vaccine does come out, and you know, I've been watching a lot of different things, reading a lot of different things about this. I go down some rabbit holes. You know, guys don't need to do that. Yet, you know, they typically say that every pandemic has a shelf life of around 18 months. So if we say January 1st, that takes us to June of next year. And whatever happens in that time, it looks like if we could be done everything by June of next year, summer opens, we're all happy, we're all on patios, having a glass of wine, having a beer, whatever it is, just out eating, enjoying with our friends. I mean, I think that if that's a realistic expectation, then I think that's what we might be looking at. Yet, let's do everything we can in our power to stay safe. Have a good time. Hope you enjoyed this video. If you haven't, please like and subscribe. If you made it all the way to this end, you obviously like the sound of my voice, so definitely subscribe. Smash the like button for the YouTube algorithm. Thanks, everybody. See you in the next one.